Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to discuss, well, that's the question really, whether or not market has got its groove back and if it's likely to stay. Plus a couple other things, which all seems to be on the move at the moment. But, before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. We've had out the way. Let's get started. So yes, again, here's the question. Has the market got its groove back? Because what we are experiencing at the moment, and we have done over the last couple of trading sessions as well, is risk is fully much on. Full risk on. The euro, for example, that has actually jumped to a 3-week high. And this has really been, fed on by a weaker dollar across the board, but also the fact that the ECB is sort of giving the impression that they used to be doves, but now they're hawks. So the market is really sort of anticipating the ECB in the future to start being extra aggressive with interest rate hikes. I mean, the Bundesbank president, Joachim Nigel, he says further clear steps must follow if they can't bring CPI down or can't bring the inflation down. So again, across the board, you've got almost full backing of everybody in the Eurozone saying we must have more higher aggressive interest rate hikes. So that's the general impression. So this is what the euro is doing. And let's have a quick look at the euro now, actually, while we're talking about it. Because this is on a daily. Like I say, it is way above parity at the moment, currently trading at 1.0131. It still hasn't really tested, though, that key level I'm watching, which is that trend line there, to completely convince me that this is a total change of fortune and the change in direction. I'll talk a little bit more about that in a minute. But yeah, that key area of interest is still 1.0221. It hasn't come close yet to touching it or testing it as of yet. But in general, like I say, this is what's spurring the euro on. But we have got generally a weak dollar across the board. Okay, it's down against the yen. It's trying to do a bit of a fight back on the yen, but we know about that. We discussed why it's slightly, it's fallen back behind the yen, but it's lower than the sterling, lower against gold. So yeah, we generally have a weaker dollar. And now I think the market really, to be honest, is getting all ready at the moment for the key event happening tomorrow, which of course is the US CPI, due tomorrow at 12:30 p.m. UTC. Because I think the market's anticipating, like I said, like I've already mentioned, the Fed's on a bit of a blackout at the moment, okay? They spoke on Friday, but now all the other Fed policymakers and members, they won't be saying anything else now or any more speeches until that key date, the 21st of September, when the FOMC get together and they will decide what they're going to do with interest rates. Are they going to be, how aggressive they're going to be? I think the general consensus really is the Feds will do 75, but that's also helping with the weaker dollar. But we've got risk on appetite at the moment, and because the Fed's in blackout, that's also helping. But let's have a quick look at how the dollar is doing against, say, the cable and some of the majors as well. Like I said, the cable, again, is on the daily. This is the second day of gains, currently trading at 1.17003. This, in my opinion, is a potential key level here, okay, to see if it can maintain and stay above the 117 handle. At the moment, it's trying to get above it, and it's trying to stay above it. But like I say, and I'll talk about this in a minute, for now, it is sort of benefiting from the general consensus that we have a weak dollar as we're waiting for tomorrow, as we're waiting for the CPI tomorrow. Look at the dollar yen as well. Okay, currently trading at 142.60, way below what that target of 145 it was trying to hit. But like I say, again, and I'll talk about this now, I think this is only a matter of time before the bull rally with the dollar against the yen continues again. So, because like I say, unless the BOJ physically does something, some form of interaction or intervention, and changes its policy statement, At the end of the day, it's still got to be a stronger dollar. But for now, is the end, it's holding its own against the greenback. Again, we can see why we got pure risk appetite across the market. Bitcoin is enjoying life again, is enjoying life as well at the moment. Currently up 4% on the day. Let's have a quick look at this now as well. Let's bring Bitcoin up as well. Where has he gone? Here we go. Currently trading at $22,415. Let me pull it up. I forgot to let me pull my chart up. Yeah, so currently trading, okay, at $22,418. So yeah, again, we have got risk on appetite. You can see this with Bitcoin. For the second day, it's bounced back. So again, and it's not just that either. S&P 500 is set for the fourth straight day of gains. Fourth straight day of gains, as you can see here. And it's currently testing this key area now of 4,099 points. It's currently trading at 4,118 points. If it can break above this, the next key level to watch will be 4,190 points. But as you can see, that's the 4th day of gains. But it's not just the S&P. The NASDAQ as well is enjoying 4 days of straight gains. So in general, we have got risk appetite on the market, a weaker dollar. Now, the question I have to ask, is this really a relief rally or a change in direction? Has the market changed its mind? Because beforehand, we've had very doom and gloom. That's why we've had a strong dollar, because don't forget that strong dollar is a safe haven. Is the market changed its mind now that things are pretty good and not as bad as they thought? Or is it just a relief rally? In my personal opinion, nothing has changed. Yes, we've had long periods of a very strong greenback, greenback. And like I said already, the Fed's going on blackout. But that inflation reading tomorrow, if it comes in really high or higher than they anticipated, we could see the mood completely change. Because yes, okay, we are pricing in the Fed is going to do 75. But if that inflation shows no signs of coming down quick enough, then the market might get even spooked. The Fed may be even more aggressive. As well as that, you can't change the fact that the UK has got inflation at 10.1%. There are signs of them going into recession in Q4. Euro, you can't hide behind the fact there is no energy crisis. There is an energy crisis, okay? And ECB has been slow off the mark. So I personally think this is just a relief rally for now. And I think very, very soon, we might see stronger dollar again and the market start to panic again. But let's see when that happens. I really think the US CPI tomorrow is going to be a major event. So I will be doing a special on that. Other events coming up, of course, this week. UK claimant count tomorrow, UK unemployment, German CPI, US CPI, UK CPI, a lot of inflation this week, US retail sales, UK retail sales, and US Michelin consumer sentiment. The market as it currently stands, like I say, all in the green at the moment. FTSE 123% up higher, DAX in the green at 2.60%, and Euro stocks currently trading 1.90% higher. So yeah, like I said, market's in a good place. It's got its groove back. It's hitting the dance floor. But I really have to question how long this is going to last, because, like I say, nothing has changed. We are still facing both Europe and UK will fall into recession before the US. Most likely they will. I certainly think the UK will be, definitely. But there we have it. Let the market enjoy itself today. Let it have a good day. It's a good start to the day. It's Monday. Why not let it enjoy itself? Don't forget, you can ask me questions anytime you wish, or simply say hello, or tell me what you think. What's your impression? Do you think that is the case? The market has got its groove back, or do you think this is just a matter of time before reality kicks in once again? Okay, not a problem. Don't forget, if you think of a question later, you can put it in the comment section either on Facebook and YouTube. I will see them and I will reply to them next time I go live on air, which of course will be tomorrow, which will be 8 a.m. UTC or 8:30 a.m. UTC, discuss the European session, and then again at 2 p.m. UTC discuss the US session. Plus, I will be doing a special. It won't be quite a watch along, but I will be doing a special on the US CPI reading at 12:30 p.m. UTC. So come and join me for that as well, because I think that potentially could be a real big big event. Anyway, no questions, not a problem. Till like I said, like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like, and hit the notification button. If you enjoyed this video and put up with me, found it useful, give me one of those. It's nice to know that you like what I do. I can see I've got a couple of likes already, which I really, really, really appreciate. I always appreciate all of you coming to watch me as well. I really do appreciate all of that. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever else should be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, there are risks at hand before entering any trade. Till next time, every single one of you, trade safe.